Now, there are certain approaches to accounting theory. Approaches to accounting theory means that with what perspective we are seeing the accounting theory. Number one, normative approach. Number two, positive approach. Number three, critical approach. Now, what is normative approach? When I say the normative method aims to create accounting principles and regulations based on moral and ethical issues. Additionally, it highlights the need for sound judgment and the necessity for accountants to act for the public good. So, when I'm doing the accounting, basically the chartered accountants do the accounting thing. So, what approach he should perform the accounting techniques? Is his approach is normative, positive, or critical? I would say it is blend of three of them, but these three approaches have different values. Normative approach means that when you're performing the accounts, you have to follow the accounting principles. Normal. Normations should be. The norms should be followed. Up to date norms, up to date accounting principles should be followed by a chartered accounting, by the accounting professionals to do the accounting, to record the transactions while doing the recording of transactions. So, normative approach, I repeat, it aims to create accounting principles and regulations based on moral and ethical issues. And obviously, we should think from the public point of view that while we are recording, we should do no harm to the society, right? So our accounting principles should be in favor of society for the public good. Now, what is positive approach? How accounting is actually done in practice. It is predicated on the notion that accounting is a social discipline that is influenced by the goals and principles of different stakeholders, such as managers, investors, regulators, and accountants themselves. See, when the financial statements are maintained, now these balance sheets, these profit and loss account, not only one person, but there are many people who are interested in these statements. And who are these people? These, the one I have highlighted, the stakeholders, those who have invested in the company. Obviously, they are interested that how the company is growing, whether the company is earning profit in next year, whether we are going to receive dividends on time or not, whether we are getting our profits, whether our share value is increasing or not. So stakeholders are interested from that point of view. Why managers are interested? Managers want to see what is our growth in this company. If the company is growing, they are growing performance wise, right? Everyone wants to be associated with the growing company. No one wants to be associated with the falling company, right? So managers are interested in the financial statements too. Then investors. Obviously, investors want to see that when I am providing money to this company, is the company is able to utilize it properly? Will it generate sufficient profits to me? Right. So main motive is what they are earning from the company. Regulators like government authorities, they have separate special interests. Like they have to see that whether they are meeting corporate social responsibilities, whether they are behaving as per the economy, whether they are behaving for the good of the economy, right? So whether they are paying tax on time, right? So regulators, government authorities, tax authorities are interested in that way, and accountants are interested. Obviously, they have to see whether they are maintaining the accounts up to date according to the latest accounting principles, because there are audits in the company and they should not be judged upon. Right. So what is positive approach? Now I have just simply explained to you how and why these different parties are interested in accounting. Then only you can relate with this positive approach. Positive approach, I'll read again. How accounting is actually done in practice. Means this approach means ki actual mein how we are following. We normative approach says that yes, we should do this, we should follow accounting principles, we should do that, A, B, C, D. There are certain norms to be followed. But positive approach says what is being actually done while recording the financial transactions. Are we actually following the norm? Are we meeting these people's interests? these people who are interested in financial statements, क्या हम इनके हिसाब से accounts prepare कर रहे हैं, क्या हम इनके हिसाब से financial statements prepare कर रहे हैं, are we doing actually as per their interest? This is positive. So what is the difference between normative and positive? Normative says these are the norms should be followed while preparing the financial statements. Positive approach says these are the norms actually being followed. What is actually being done while recording the financial statements? So the positive approach aims to comprehend the variables that affect accounting practices and how accounting affects the behavior of various stakeholders. Right? The positive approach says, I'll repeat, aims to comprehend the variables that affect the accounting practices and how accounting affects the behavior of various stakeholders. Obviously, whatever financial statements we have in hand, accordingly, the stakeholders means all the parties who have certain stake in the company, they will change their decision. Right? So stakeholders can include shareholders, not only shareholders but employee also, because certain employees also get shares, certain like bonus shares, so they are also having directly indirectly a part, a share in the company, right? Now, last approach is critical approach, right? The objective of critical approach is to promote more democratic and unrestricted form of accounting while exposing the biases and limitations of accounting methods. It is frequently linked to interpretive analysis and qualitative research techniques. So this says that when you're doing the accounts, you should do from the critical approach. For example, what is the critical approach? I'll give you one example, that we should consider more of our losses and less of our gains. Means the gains which are not predicted to be 100%, we should not estimate and record them. And the losses, the expenses, we should first record our expenses and losses, and we should least record our gains and profits. Those who are 100% for sure, those only should be recorded, right? So estimate all profits and losses accurately and consider more for the expenses. Means we should not be like कि हम थोड़े fake profits show कर रहे हैं कि इतना प्रॉफिट तो हमें आ ही जाएगा, इतने लॉसेस, हमारे लॉसेस कम है, हमारे एक्सपेंसेस कम है, बट हमारी इनकम ज्यादा है. When we are doing that, we are showing wrong prediction of our accounts.